Alrighty, good morning everybody. It's Tuesday, October 24th. Let's go ahead and do a review for yesterday so we can get into the pre-market for this morning. Hope everyone had a good day yesterday and you're having a good morning right now. I'm going to go ahead and go all the way back to the beginning of yesterday here, and I do want to pull up the report from yesterday just to review some of the things we talked about. First of all, the synopsis for all of our signals is that we had some bullish clues from the overnight lows, obviously in the context of a heavy seller's market. So that was one thing we were noticing. And some of the plans of action and key insights here. Markets holding right at the medium 61.8 retrace with a potential 4-hour and daily bullish signal. This is a great spot to find a temporary bounce in the context of this heavy seller's market. We are not bulls until price can get above some key areas this morning. The pocket of daily power levels from 42.37 to 45 would be the first task for the bulls to get through, including obviously VWAP and the 200 on our short time frames there. And so let's look. 37 to 45 was this pocket right here. Let's see if I can draw it on here. Oh, wrong one. So this little area right here, about 37, which was the holy orange power level, to about 45, which was just above the close of the day before. That was kind of the first area we wanted to see the bulls get through in order to have any faith that we could expect to push to anything above there. And that's really where we expected maybe the bears to jump in and hold the market to continue to push lower. So the market opened here. You can see it was a nice little pullback to retrace that overnight bounce and push to a slightly lower low to bounce higher. So this is that textbook peak below and bounce formation, right? So we had bullish clues from the overnight low telling us we could expect maybe an attempt to break out to the upside. We did fail off the VWAP in the overnight session as we came into the open, but this right here was your textbook peak below and bounce. You have your low of the overnight session. We bounce out. They bring it down and just a couple ticks, couple points below that low, bam, and then from there the breakout happens, right? And that's exactly what happened here. We were in a big sell-off in the market for quite a while, made that double bottom, or what I call a peak below and bounce, right? The price came down just below that major low, and then we got the breakout to the upside here. If this would move, I don't know what just happened to my chart. Just totally froze. And then we get the breakout through the expected resistance area, right? So that is something that we see happen very often, which is why I warn you guys, and what I'm going to talk about today when we get to our pre-market is peak below and bounce and peak above and fail patterns are very common. So when I give you a line in the sand, when I say, hey, look, if we get below that level, then we're bears looking for a push lower, I don't mean just that. Because this is one of those very textbook scenarios I talk about. Peak above and fail, peak below and bounce is always something that can trick, especially breakout traders when they're waiting for a break at that level and then they just jump in. Next thing you know, the market's now way above, where they expected. So that's a beautiful example of that from yesterday. And so our bullish bias held when we were able to get up through VWAP and then through this first pocket of expected resistance. That was what we expected to hold. And if the bulls could get through there, we were expecting a push up into some levels up above us here. So on the pullback, once the market showed its face, right? So for the first few minutes of the open here, for the first half hour, first 45 minutes, it really wasn't giving us any clear direction outside of the fact that we did get this little peak below and then we pushed to a new high in comparison to this overnight swing at some point right around here at about 30 minutes after the open. So 30 minutes after the open, you got your fake out to the downside, and then about, well, I should say 15 minutes after the open, you get the peak below, and then about half hour later, you get a new high in the market compared to that previous swing. So that should have been giving you your first clue that, hey, maybe that was our typical peak below and bounce, because what we want to see is now the breakout to the upside. So now we get the break above. It holds on the pullback to the holding orange power level there. And then this, in my opinion, was probably the best trade you could have taken yesterday. And that was once the market broke out, once we got through the top end of our expected resistance, the market pulled back right to the VWAP there, for pretty much a textbook 38% retracement of that leg. There's your 38, there's your hopeful, there's your VWAP, all lining up within a few ticks here around 42.36.5. So the market bounced at 42.36.5 to the tick and then continued to try to push to higher highs for the day, which it did, right? So if you missed out, once the market showed its face, got through the high that we were looking to break before we ever did anything on the bullish side, and let's say you missed the pullback to the 38 retrace, which also was VWAP and the hopeful, you could have bought the back end of, or the top end of the 200 moving average as the market continued to trend to the upside there. So if you missed out on the buy off VWAP or hopeful here, again, I mean, we're talking about 2 or 3 ticks of risk on this pullback to then capitalize on a push. Then I would have been taking profit in front of here at about 65. So you're talking about over a 20-point push with nearly zero risk. And then again, if you missed out on that and you started to notice we were starting to come back up here, you could have definitely bought a pullback to the close of the day before the 200 there, or just a pullback to the 200 here as it broke out and got to new highs. So if you were a little skeptical because we came up and then started to fail here and you were skeptical to buy, you still could have bought on the pullback over here once we got to a new high for the day, right? So there were good opportunities to the upside. Interestingly enough, what was the major area of resistance about 2 hours after the open to the tick? Our scaffolding level. So once the market broke out through our first expected resistance zone, pulled back and held the VWAP to the tick, it pushed and then found resistance for an hour, maybe an hour and a half to the tick off our scaffolding. So it tested it, pulled back, tested it, pulled back, and then finally at one point they broke through, came up into 50% of the day before, looked like it was going to continue to push for the bullish side of things, and then the whole thing dropped out. And that's where, like I said, it gets tricky when you're trading in one direction and then the market starts to say, if you're trading in the bullish side and the market starts to pull back, you're buying the pullbacks and then they just continue to sell off. So you could get washed out in that type of situation. But interestingly, we find resistance at the scaffolding, our pocket 65 to 67. That should sound familiar because it's been a very relevant support and resistance for multiple days now. Once they got through that, basically the high of the day was 50% of the day before. So they got all the way up. There was a bullish rally all the way to 50% of the day before. They peaked through it by 3-4 points there, and then that was it. It sold off from there. And look at what happened here at the end of the day. This is, again, it stair steps to the upside. Once we get through levels, it'll start to stair step one by one, right? On the other side of things, it'll stair step back down, and that's exactly what happened here yesterday. So we got below 50% of the day before, and then came up and tagged it nearly to the tick. Then we got down below the 65 to 67 area, bounced up and then held it nearly to the tick, and then continued to come down and then got through VWAP, and then bounced up to the back end of VWAP, held it nearly to the tick. And then also very, very proud to say that the low of yesterday on the pullback there at the end of the day was our scaffolding level. So the market pushed through our expected resistance, pulled back to VWAP, pushed to the next area of expected resistance, held it to the tick for about an hour. Then finally the bulls pushed through that, basically held 50% of the day before, not on the first test, but the second test held it nearly to the tick for resistance. And then we stair stepped back down those levels, holding the back end of those levels as we sold off. And then the low at the end of the day was literally our scaffolding level to the tick. And as you can see, just about 20 minutes before the close there, they ducked through it by maybe 2 points max. And then right at the end of the day there, pulled back, held it, and bounced out for a 10-point bounce going into the close. So some beautiful price action yesterday, some great opportunities. And again, if you follow the roadmap and you follow the things that we're telling you to do, you should be on the right side of the market more often than not. So here we are coming into the open for this morning. So here's the Globex last night. And the most notable thing about last night And by the way, you might notice this hold right here off the Hopal. Hopal didn't print until, for me, it prints right, I guess, at 5 a.m. Central, right? So, and back when I'm in Vegas, this starts printing at 3 a.m. for me. So that wasn't on the chart. The most notable thing about last night is that the market pulled back and held 50% of Monday's price action, right? 50% of yesterday. And now the bulls are in power and trying to push higher. And interestingly enough, and it's like, I really don't know how to explain this stuff, but we held 50% of the day before in the overnight session. We popped, and now we're having trouble and pulling back. We got a double top nearly to the tick from 42.65 to 67. That same pocket that was major resistance for multiple days is now resistance this morning nearly to the tick, and the market's pulling back. So just, I don't know why these levels that I literally just come up with based on previous price action end up working so perfectly. But here you have it again. High of yesterday, basically our roadmap level. We did get a peek through it one time, and then we held it nearly to the tick. And the low of yesterday, basically our scaffolding nearly to the tick, right? And now in the overnight session, low of the overnight session, basically our scaffolding here. High of the overnight session, the next pocket of scaffolding up here. So pretty awesome stuff. That brings us here into the pre-market for this morning. So let's go ahead. We'll pull up the new report and take a look. And actually, maybe before we switch over to that, let me just share the picture from yesterday that I left with you guys. And that was it right here. There's your first task for the bulls. All of the previous daily power levels sitting right in there. And then our next target was right there, 65 to 67. And there's 50% of the day before. So once the bulls could get through there, we were expecting a push into these discrete areas of resistance above. And then obviously the bullish line in the sand all the way up at 50% of the day of the week before. So if we could get all the way up through there, the higher time frame bias would be for the bulls, right? And then we had down below us here all of our targets for the bears if they did end up rolling back over and pushing to new lows. Of course, I did mention yesterday, very, very important here, 42.06 quarter, very important for the bears to get through, right? So even if we break through the lows, let's go back over here. Even if we go break through the lows of yesterday, 42.06 quarter is just a couple points away. And that is a very, very, very important area for the bulls to defend or for the bears to get through. Basically a very important line in the sand, just like our 50% of the last week up top here. So around 43.33 to 35 here, major area line in the sand for the bull bear position. And then down here, same thing, right around the 61.8 of the medium leg and that 42.06. Interestingly, right where we're finding support is a very critical line in the sand there for the bears or for the bulls to defend. All right, so let's go up to today's pre-market. Again, still pulling back nearly to the tick from our expected resistance area here in the overnight session. Let's go ahead and pull up today's report. So you guys should have the report in the chat room. I shared it not too long ago.